Goals and objectives of physical policy. The first point is I want to explain what is the meaning of physical policy, and before explaining it, let us go to Google Baba and see what policy is meant by. Physical policy is the mean by which a government adjusts its spending level. Just see the words. Government. First word is government, not the central bank, not the governor. Government. Adjust its spending level, that how much he has to spend in infrastructure, how much he has to spend in subsidies, how much he has to spend in developing dams, bridges, all that facilities, in defense, and tax rates. It means how much is their income. It is just like a profit and loss account. In this we debit expense, and in this we debit credit incomes, and we compare income with expense, that it is how much is the expenditure, how much is the spending, and how much is the income. It is that policy. So it means by which a government adjusts its spending level and tax rates to monitor and influence the economy, nation's economy. It is the sister strategy to monetary policy. I repeat, it is a sister strategy to monetary policy. It means monetary policy and physical policy are, they are just like brother and sister relationship, which a central bank influences. Okay, and if I see the physical policy, I will be telling you what I mean by automatic stabilizers. But before that, let's move to the concept named as physical policy. Now, physical policies again, this is taxes, these are the benefits, these are, citizens, this is government, and the relationship between government and citizens, how much to charge, how much not to charge, whether the tax rate should be progressive, whether it should be non-progressive, how much it should be the direct tax, how much should be indirect tax, what should be the rate of GST, what are the policies, what are the returns of GST, all something blah 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 is nothing but physical policy. So they have given what are the difference between, six differences between policies, six difference between, they have given jot down the six differences. So what is the difference between monetary policy and physical policy? The first is, in case of monetary policy, the tool is interest rate, but in case of physical policy, the tool is tax and government spending. It means they have interest, they have government spending, effect, cost of borrowing, budget deficit. It means, if what is the effect of interest rate increasing or decreasing? The borrowing cost will increase or decrease, but in case of that, the physical policy, either we will be having physical deficit, or either will be having physical surplus. When expenditure is more than income, it will be a deficit, and when expenditure is less than income, it will be surplus. And the next point which they have relates is distribution. Higher interest rate hit homeowners but benefit savers. Depends upon taxes. Okay. Exchange rate, higher interest rate, supply side, limited impact, higher taxes may affect. It means they have given us the different differences. So we will be coming to that. But before that, I want to tell you that let's start with first point. Physical policy refers to. No doubt you have written in my lecture number 1 something about the definition of physical policy. But my request to you will be, please write down again. Physical policy, please prepare your notes along with me. Physical policy refers to government's spending. Physical policy refers to government spending. That how much is government spending? That is government expenditure. That is government expenditure. And 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 government's income, that is taxes. I repeat. I repeat again. I repeat my golden words again. Physical policy refers to, first point, it is related with government. Physical policy refers to government spending, that is government expenditure, and government's income, that is income is taxes, direct tax or indirect tax, for meeting macroeconomic goals. Now, what are the objectives of that? So that the whole economy grows, all the sectors of that economy should grow, all the people should have equal wealth, all the people should get equal opportunities. So these are the economic goals which are to be met, and those are met by with the help of physical policy. And physical policy is nothing but it is a relationship of physical expenditure and physical and income, taxes. So if income is more than taxes, income is more than expenditure, it is a case of physical surplus. So just write down, when tax revenue is greater than government expenditure, when tax revenue is greater than government expenditure, I will say it is physical surplus. Very simple, very simple. We say it as profit in case of sole proprietorship firm, but in this case we will say it is a physical surplus. And when tax revenues are less than government expenditure, it means when tax we are collecting is less than government expenditure, then it is physical deficit. Very simple, very intuitive as well. Now the point is, we can discuss, physical policy under two broad categories. One is discretionary physical policy, and second is automatic stabilizers. The sheet which I have just shown you. So please write on second point. Physical policy can be discussed. Physical policy can be discussed under two broad categories. Physical policy can be discussed under two broad categories: discretionary physical policy and automatic stabilizer. So these are more important. I will be explaining both of them. I repeat again, physical policy, I want to discuss physical policy. We can discuss under two concepts, under two discussions. One is discretionary. It means government on its own taking the decision, that this sector tax rate should be reduced or this sector tax rate should be increased. It means they are taking conscious decisions. If the government is taking conscious decisions in regard to tax, in regard to revenue, in regard to expense, I will say it is discretionary physical policy. I repeat it again. We can discuss physical policy under two categories. One category is named as discretionary physical policy, and second is automatic stabilizer. More important is automatic stabilizer, but before that I have to explain you what I mean by discretionary. As I say, discretion, it is on the discretion of the government that how much lagan they have to charge, how much tax they have to charge, from which sector they have to charge more, and from which people they have to charge less, to whom they have to give subsidies. That is named as discretionary physical policy. So please write down third point: discretionary physical policy. It is a conscious decision. First point, a decision to reduce tax rate overall, or a decision to reduce tax rate for SMEs, small and medium enterprises. I will say it is named as discretionary physical policy. But now we are coming to automatic stabilizers. We can discuss physical policy as automatic stabilizers. In economy, as per this category, we generally say that economy has built in already some automatic stabilizers. It means there is nothing to take any decision consciously by the government. Automatically the system will adjust itself. So those are named as automatic stabilizers. So now we should be aware that what is the actual meaning of automatic stabilizers. So in this I will be taking two scenarios to explain that what is the meaning of automatic stabilizer. One scenario will be when the economy is going down in the recession, to trench. In the business cycle we have discussed. And the second scenario is when the economy is doing good. Now what happens in this and how those automatic stabilizers automatically work, that we will be starting with when. Now please be with me for coming 2 minutes. Now coming 2 minutes are very important. Again I am telling you, please sit straight. Coming 2 minutes are important. So when I say during recession, the tax receipts will go down. We agree with that. When I say recession, it means the activities are slow down, GDP is less, output is less, tax is less, consumption is less, demand is less, supply is less, everything is less. So tax revenue will be less. Now when tax revenue will be less, it means income side is less as compared to the expense, government expense. It will give rise to deficit. It will give rise to deficit. you know. So tax receipts will go down, then physical deficit will go up because income has decreased, government income has decreased, and government expenditure has increased. The optimum physical policy is now the point is, in case of physical deficit, can you tell me what should be the optimum physical policy? Whether it should be expansionary in nature or whether it should be in contractionary in nature. We have already discussed in monetary policy also that whether that monetary policy is expansionary in nature or whether that monetary policy is contractionary in nature. Again, I am coming here. In physical policy, again, can be of two types: expansionary in nature and contractionary in nature. Now, can you tell me when it will be expansionary in nature? Now, when my government expenditure is more than government income, I will say that type of policy is expansionary in nature. And in case of market is coming down, when the business is coming down, when growth is decreasing, when there is a downfall in the system, then the real answer, the best answer to that type of economy, that type of situation is expansionary physical policy, because government income is less and government expenditure is more. Now when the government is doing more expenditure on infrastructure, it means in future it will grow like anything. So the best answer for declining growth, for decrease in the economy is expansionary. The policy should be expansionary in nature. So please write in fourth point, automatic stabilizer. In this, government will not take any decision, automatically the things will adjust. Scenario 1, during recession, the tax receipts will go down, physical deficit will go up. The optimum physical policy is expansionary in nature. Now, can you tell me that how many types of, I can say physical policies? Before coming to that, I will say either we will be having expansionary physical policy or we will be having contractionary physical policy. Expansionary physical policy means when government expenditure is more than government income. Contractionary means when government expenditure is less than government income. In this deficit, in this I will say, in case of expansionary, surplus will decrease, and in this case contractionary, surplus will increase. Now, in case the economy is downward, in case the economy is decreasing, then this type of policy is best suited for that. And if the economy is growing, it is in the expansion mode, then this type of policy should be the best optimal policy for that. Now, as per automatic stabilizers, this will automatically happen, and automatically in the future it will grow like anything. It means government has nothing to take any decision. So please write on this point again, very important. I think you have written scenario 1, during recession, when tax receipts will go down, financial deficit will go down. In that case, the optimum policy should be expansionary. That government expenditure is more than government income and it is automatically there. So it is named as automatic stabilizer. So let me move to scenario B. In case of expansion, when there is an expansion, when there will be expansion, when the economy is going upward, when there is a huge production, and when there is a full employment case, that is expansion. Automatically tax revenues will be more than tax than government expenditure. It means in these cases the surplus will increase or the deficit will decrease. Automatically in this type of scenario, contractionary physical policy is best, and that has been followed. So when economy is growing, then tax receipts will go up automatically. Then government expenditure will go down. Then this automatically physical deficit will decrease. So these are inbuilt stabilizers. So please write on this note, these are inbuilt stabilizers within the economy which will control. I repeat, I am doing physical policy. Within physical policy, we have started with, we can divide or we can discuss in two categories: discretionary physical policy and automatic stabilizers. We are on automatic stabilizer, that there can be two scenarios. One can be recession and second can be expansionary mode. In case of expansionary mode, this will happen. So the point is, this will automatically happen. There is nothing to take any decision. So I am coming to the next point. which is the last point of today's lecture. That is objective of physical policy. Now, please, for some moment, become Prime Minister of a country, Narendra Modi, or just be a Chief Minister of any state. What are your objectives in starting with physical policy? Now, I think the first objective is that in your nation or in your state, your objective should be the wealth should be equally divided among all the people. There should not be huge difference between rich and poor. The country in which there is a huge difference between rich and poor, that country cannot grow at a greater speed because the wealth should be divided equally. So this should be the objective, that wealth should be divided equally. So this is my objective. I will see what are the tools to fulfill that objective. I am not going to in the school tools. Rather, I am just discussing what can be the objectives and the wealth, economic activities, employment generation, all that something is named as. And your objective will be to help undeveloped sectors by giving subsidies, by helping them, so that there should be we should give equal opportunities to all the people. So these are the objectives. So please write the first point: influencing the level of economic activity and aggregate demand. It means we should to take those steps with the help of which my demand will increase, my economic activity will increase, and when my economic activity will increase, when aggregate demand will increase, automatically other things will pop up accordingly. Redistribution of wealth. I have just told you the difference between rich and poor should not be there. We should, by Wealth Tax Act, with the help of Income Tax Act, we should decrease the difference between rich and poor, between Mukesh Ambani and a rickshaw driver. There's a huge difference between Mukesh Ambani and rickshaw puller. So we have to reduce that difference. This is the objective of physical policy. Allocating resources among the economy. In case some resources are not there to for particular sectors or to particular areas, so we should redistribute that. In case there is any problem in Kerala, flood is there. So we have to, reallocate the resources. These are the main objectives of a physical policy. Developing the economic activity and aggregate demand, increasing in that, redistribution or reallocating the wealth and distribution of resources so that everyone can get an opportunity to grow. So, hope you have understood what is the meaning of physical policy. What are the two broad categories? One is discretionary physical policy and second is automatic stabilizers. So just see in Google Baba that what I mean by automatic stabilizers as per Investopedia. Automatic stabilizers are the economic policies and programs designed to offset fluctuation in the economic activity without, this is important, without intervention by the government or policy makers on the individual basis. The best known automatic stabilizers are corporate and personal taxes and transfer payments such as unemployment diseases. Automatic stabilizers are so called because they act to stabilize economic cycles that are automatically triggered with this. So the whole stuff is, I have just told you that this is automatic stabilizer. So in case you want to increase your knowledge, you can have in refer with Investopedia. Hope you have enjoyed it. Be happy, be jolly.